Welcome to another episode of Technical Insights. We're talking about foreign investments today, and we've broken it up actually into two separate topics. So to this one, we're wanting to talk about foreign investments approvals by nation. So David, I understand that 28% of approvals came from China.
Correct.
In the year 15 to 16. Is that a positive or a negative for the property market?
We like the Chinese, and obviously the Chinese economy is going really well, so there's a lot of wealthy people in China and they're choosing to park some of that money here. So that's good on that side, but the downside is that dramatic changes to one country's laws may result in a contraction of that money coming over. So it doesn't matter which country it is, any amount of volume of that size is a bad thing because it can be abruptly cut off.
So do we know what the second percentage was and which country that came from? Like, what's the difference?
It's a very easy spread. The next one is the USA at 7.3, which strikes me as a little bit unusual. These are residential stats. We did check them, but
where do these stats come from?
The Foreign Investment Review Board.
And what do they look at or calculate, and when does that? How is that information released?
Well, I think they're very lazy at the Foreign Investment Review Board. We actually wrote a letter to Scott Morrison saying we want this data monthly. So Scott, if you're listening, we want this data monthly.
So when the last time that this data came out was April this year for the year before. So there's a big lag in the data, which doesn't really help our jobs with knowing what's coming up.
It doesn't help anyone in the economy to have the data released so late, because the data is very important because it affects the money supply and it affects the ability for developers to develop and sell, and it affects our understanding of the market. So we want it faster. That's the first thing. Foreign Investment Review Board do it, and they do a good job. They just take too long.
So going back to China, what could be the consequences of an economic downturn in China for us here?
Well, an economic downturn is one issue, but the big issue right now is the government's restricting capital outflows out of China. They can take a very limited amount of money out of China, and they can't take it out for the purposes of investing in property elsewhere. So we should see in this financial year a dramatic decrease in Chinese foreign investment into our property, and that means a dramatic decrease in foreign investment in general, and that can affect our money supply and potentially cause some contractions.
Yeah, and our housing supply as well.
Exactly. If developers are relying on selling most of their stock in one country, then what you'll find is they won't be able to sell stock at the same levels, so we could have less properties being built, and that could mean an undersupply.
Okay. Well, it'll be interesting to see what those figures when they come out, hopefully in April will be the next one. Stay tuned. We also have an article on this very topic on performancedata.com.au, so if you're interested to learn more, please visit that site.
Thanks, Jess.